Hi, Assalamualaikum and very good day to everyone. My name is Muhammad Faiz bin Anwar. My metric number is 281962. So, I will start this presentation about 1.0, which is define what is it. For the first one, Cagamas notes. Cagamas notes are debt product issued by Malaysian financial firm Cagamas Berhad. Cagamas Berhad, simply Cagamas, is a Malaysian national mortgage corporation founded in 1986. Its major mission is to aid in the growth of the secondary mortgage market and to provide liquidity to the country's home finance sector. Next, Islamic Treasury bills, which known as ITBs, are financial instruments issued by Islamic countries' governments or central banks to raise short-term financing from investors. They are founded on Islamic ideas and follow Sharia-compliant practices, implies they follow Islamic finance norms and principles. Next, Islamic commercial papers. Islamic commercial papers (ICPs) are financial instruments used in Islamic finance that serve as a short-term and debt securities. They are issued by corporation, financial institution, or government to raise funds for a specific period, typically ranging from a few days to a year. Next, we go to corporate notes, which is corporate notes, also known as the corporate bonds or corporate debt securities, are financial instruments issued by corporation to raise capital from investors. They represent a form of long-term borrowing by companies to finance their operations, expansion, or other financial needs. Corporate notes are typically issued in the form of fixed income securities with a specified maturity date and interest payment. Next, corporate bonds. Corporate bonds are debt securities issued by firms to raise funds for a variety of purposes, including supporting expansion projects, refinancing current debt, and funding mergers and acquisitions. When investors buy corporate bonds, they are basically lending money to the issuing firm for a set length of time in exchange for regular interest payments known as coupon payments. Okay, let's continue this presentation with 2.0. For what purpose is it created? For Chagamas notes, they serve primarily to provide a mechanism for Chagamas to raise capital, which is subsequently used to purchase home loans or mortgage-backed securities from Malaysian financial institutions. Chagamas, Chagamas helps financial institutions manage their liquidity demands and encourage them to continue providing housing finance to consumers by purchasing these assets. Next, Islamic Treasury bills. Islamic Treasury bills are designed to adhere to Islamic finance norm, which forbid the payment or receipt of interest, which is riba. They are instead founded on fundamental Islamic contracts like wakalah, which is agency, or murabaha cost plus sale. These agreements ensure that the issuance and trade of suku adhere to Islamic standards. Next, Islamic commercial papers. Islamic commercial papers are created to serve as the short-term funding instruments that adhere to the principle of Islamic finance. They also provide a Sharia-compliant alternative for businesses and investors who wish to avoid interest-based transactions, which is riba, and engage in ethical financial practices. The main purpose of issuing ICP is to meet short-term financing needs of corporations and financial institutions. So corporate notes are more to financing operation and growth, which is company issues corporate notes to raise funds for their day-to-day operations, expansion plans, research and development activities, acquisition or other investments projects. These notes provide a long-term source of capital to support the company's strategic objectives. Next, for the corporate bonds are frequently issued to support capital expenditure, such as the construction of new facilities, the procurement of equipment, or the implementation of infrastructure projects. Bonds basically provide long-term funding source for corporations and allowing them to invest in their growth and development. Okay, guys, let's move to the next part, which is 3.0. Who and how is it created? For Chagamas notes, Chagamas developed the required legal papers, such as the issuing prospectus or offering circular, which contains complete information on the Chagamas notes. The documentation defines the term and condition of the notes and provide key information to potential investors. Next, for Islamic treasury bills, usually they created by government authorizations, which is the issuance of Islamic treasury bills is authorized by the government or a competent governmental institutions. This authorization may be obtained by legislation or regulatory frameworks that allow the government to raise cash in accordance with Sharia principles. Next, Islamic commercial papers was created by issuing entity. By issuing this entity, they can be a corporation, financial institution, or government. It decides to raise short-term funds through the issuance of ICTs. The issuing entity should comply with Islamic finance principle and have the necessary authorization to issue these securities. So next, for the corporate notes, usually created by the underwriters and syndicates. The insuring company typically engage investment bank or underwriters to assist with the insurance process. These underwriters form a syndicate to help market and distribute the corporate notes to investor. The underwriter may also provide advice on the structure and pricing of the notes. And for the lastly, for the corporate bonds, they usually created by bond offering terms. The corporation established the particular terms of the bond offering with the assistance of underwriters. This comparison information such as the bond principal amount, for example, fixed value, maturity date, when the principal will be returned, interest rate or coupon rate, frequency of interest payments, and any additional features or covenants related to the bond. So that's all part from me. I will pass to the next presenter. Thank you.
6.0 Responsibility Obligation of each part. For the Chagamas notes are short-term debt instrument issued by Chagamas Berhad with responsibility and obligation for both the insurer and the note holder. The issued Chagamas is responsible for repaying the principal and making timeless interest payment, maintaining collateral backing the notes, providing disclosure and reporting, complying with regulation, maintaining investor relation, and potential redeeming and repurchasing the notes before maturity. For Islamic Treasury Bill, the responsibility and obligation associated with this bill include the payment of principal and profit, ensuring Sharia compliance, providing disclosure and reporting complying with Sharia standard, redemption and repurchase option, and maintaining investor relation. The third one, Khazanah bond. The responsibility and obligation, this include the payment of principal of interest, disclosure and reporting of relevant information. The insurer is responsible for repaying the principal and making regular interest payment, providing accurate disclosure, complying with regulation, maintaining communication with bondholder, managing redemption and repurchase processes, and ensuring financial stability. Khazanah note, the insurer is responsible for repaying the principal and making regular interest payment, providing accurate disclosure, complying with regulation, maintaining communication with note holder, managing redemption and repurchase processes, and last but not least, ensuring financial stability. Last but not least, for the corporate bonds, the insurer is responsible for repaying the principal and making regular interest payment, providing accurate disclosure, complying with regulation, maintaining communication with bondholder, managing redemption and repurchase processes, ensuring financial stability, and abiding by covenant. Investors should carefully review the offering document and seek professional advice to understand the specific responsibility and obligation. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Najra Bitamli. My mentor number is 284595. Chagamas note. Strategic risk. Strategic risk is the risk that the group business plan, and goals won't be met. This can be caused by both internal and external factors. Credit risk. Credit risk is the possibility of financial loss brought on by counterparties or borrowers' inability to perform their contractual or financial commitment. Market risk. Market risk is the potential financial loss brought on by change in the market rates and price. Liquidity risk. Liquidity risk is occurs when the group lacks sufficient funds to satisfy its financial obligations as they mature. The lastly is operational risk. Operational risk is the potential loss brought on by substandard or ineffective internal system, people, and process of as well by uncontrollable outside factors. Islamic Treasury bills, credit risk, primarily issued by governments or government-related companies, and there is a danger of principal of or interest default. Market risk, interest rate change can have an influence on the value of this asset. Existing treasury notes may lose value if interest rate rise and vice versa. Liquidity risk may have limited liquidity depending on market conditions. Selling or trading this asset at desired price. Inflation risk. Inflation reduces the buying power of future cash flows, especially treasury bills return if the rate of inflation exceeds the rate of return on the bills and the real value of the investment may decrease over time. Islamic commercial paper market risk. The value of these securities could be impacted by change in the interest rates of market situation. Liquidity risk. Islamic commercial papers may have limited liquidity, especially if issued by smaller or less established organizations. Sharia compliance risk. Islamic commercial papers are designed to adhere to Islamic rules that forbid the earning or payment of interest. Re- Next, regulatory and legal risks. The regulatory structure and legal environment for Islamic finance may vary from country to country. Inflation risk. Inflation reduces the buying power of future flows, especially commercial paper yields. Corporate notes. First one is credit risk. Corporate notes are subject to credit risk, which means that the company that issue the notes might not pay the interest of the paid amount when it's come due. Interest rate risk. Corporate notes are frequently fixed income instrument having a fixed interest rate. Change in market interest rate can affect the value of these notes. Next is liquidity risk. Corporate notes may have restricted liquidity, making it difficult to sell them promptly and at reasonable rates. Next is market risk. Corporate notes can be affected by things like economic downturns, market instability, and even in the world of politics. Next is regulatory risk. Change in rules or government policies can have an impact on corporate issuers' profitability and stability. Corporate bonds. First is credit risk. Credit risk is the chance that the seller won't pay the interest or the capital amount when it's due. Next is interest rate risk. Corporate bonds are usually fixed income investment with a fixed interest rate. Next is liquidity risk. There is a different amounts of availability for corporate bonds, which means that it may be hard to sell them quickly at fair price. Next is market risk. Economic factors, market volatility, and geopolitical events can all have an influence on bond pricing. Next is call risk. Some corporate bonds have call terms that let the company that issue the bonds get their money back before the bonds expire date. Chagamas note. Diversification. Fixed income in securities like Chagamas note to other asset types could have reduced risk and possible increase total yields. Next is support for housing market. Chagamas is critical in supplying liquidity to mortgage lenders, enabling to the flow of capital into the house industry, the encouraging home ownership. Next is low default risk. Chagamas notes are backed by the Malaysian government, which gives them a high level of security and lowers the risk of failure. Next is liquidity. Check are regularly traded in the secondary market, allowing investors to acquire and sell their holding are needed. Islamic Treasury bills. First, halal investment. Investing in Islamic Treasury bills enables investors to adhere to Sharia law, which forbids earning or paying interest riba in indulging in speculative activities. Next is fixed and irregular returns. Islamic Treasury bill provide investors with a consistent and predictable income sources. The issuing government or central bank pledge to paying periodic payments based on a set profit rate of return on investment. Next is liquidity. Islamic treasury bills are often traded on secondary markets, allowing investors to acquire or sell their holding before maturity. Next is tax benefits. Investing in Islamic treasury bills may provide tax advantage depending on the jurisdiction. This advantage might include tax-free status on Islamic treasury bills or tax deduction. Islamic commercial paper. First is liquidity. Islamic cash paper are frequently traded on secondary markets, allowing investors to acquire or sell their holding before maturity. Next is short-term financing. There are short-term debt instruments that can be used to raise funds for a set period of time. They allow investors to earn returns on their investment in a relatively short period of time. Next is fixed and regular returns. Typically offer fixed return to investor. The issuer of the Islamic commercial paper commits to paying periodic returns based on a predetermined profit rate. Next is low risk. They are often thought to be low risk investment. They are often rented by trustworthy companies such as corporation. Corporate notes. First is recognition and appreciation. Employees that keep accurate and well organized companies' notes might be rewarded by their employees. Next is career investment. Outstanding note-taking abilities and the capacity to keep comprehensive and well-documented corporate notes can be considered a value asset. Next is training and development. Outstanding note-taking abilities and the capacity to keep comprehensive and well-documented cooperative notes can be considered a value asset. Next is enhanced collaboration. Employees contribute the improved communication and collaboration inside the organization by keeping true corporate notes. Corporate bond. First is fixed income. Corporate bonds offer investors with a steady revenue stream in the form of monthly interest payments. This regular income may be appealing to investors looking for a steady cash flow. Next is higher yields. Corporate bonds typically have a greater yields than government bonds or saving accounts, allowing for a larger return of investment. Next, illiquidity. Corporate bonds are often traded on open markets, increasing their liquidity. Bonds are very easy for investors to acquire and sell. Next is quality and ratings. Credit ratings are given to corporate bonds by rating companies. These ratings show how creditworthy the seller is. Chagamas note. First, interest rates. Bond price tend to decline when market interest rate rise and vice versa. Next is quality. Credit rating agencies normally assess Chagamas notes based on their creditworthiness and capacity to meet financial obligations. Next is maturity yield curve. Longer maturity notes often offer greater yields than shorter maturity notes to compensate investors for the longer holding period. Next is supply and demand. If notes are in high demand, the issuer may be able to price them at a lower yield, lowering Chagama's cost of borrowing. Islamic treasury bills. The first one is face value and discount. The difference between the purchase price and the face value, which is paid upon maturity, is represented by discount. Let's say profit rate. The profit rate is determined by the discount at which the T bills are issued, as well as the tenure of maturity time. Next is Sharia compliance. The pricing structure assures that investor returns are based on profit sharing and asset-backed transaction rather than or on interest-based financings. Next is secondary market trading. Islamic treasury bills can be exchanged in the secondary market after they are issued with their pricing set by market force of supply and demand. Corporate bond. The first one is coupon rate. The stated coupon rate on corporate bonds indicates the yearly interest rate paid to bondholder. Next is credit rating. Credit rating agency analyze and issue a capacity to satisfy its financial commitment and give credit ratings based on the assessment. Next is maturity. Longer maturity bonds often give greater yields than shorter terms bonds to compensate investor for the longer holding period. Next is market interest rate. When interest rate is the market rate rise, the price of existing bonds tend to fall, resulting in a greater yield for new issuers. Islamic commercial papers. First is market conditions and investor demand. Liquidity, market mood, and economic data can all have an influence on the profit rates given on Islamic commercial paper. Next is a profit rate. The profit rate is decided upon at the time of issuance and is dependent on the discount at which the Islamic commercial paper are issued as well as the tenure of maturity term. Next is Sharia compliance. It eliminates interest-based transaction in favor of establishing the profit rate as return on investment in a real asset or as a profit-sharing agreement. Lastly, a creditworthiness of the issuer. Their lower credit risk, higher rated issuers often provide lower profit rates, whereas lower rated issuers may need to offer greater profit rates to attract investors. Corporate notes. First is coupon rate. The stated coupon rate on corporate notes indicates the yearly interest rate paid to bondholder. Next is credit rating. Credit rating agencies analyses an issuer's capacity to satisfy its financial commitments and give their credit ratings based coupon rate on the assessment. Next is maturity. Longer term notes often offer greater yields than shorter term notes to compensate investor for the longer holding periods. Next is market interest rate. When interest rate in the market rise, the price of existing bond tends to fall, resulting in greater yield for new issuance.
Assalamualaikum. My name is Nur Anissa binti Jumali. My metric number is 284993. Okay, I will continue with how these instruments are traded. For Chagamas notes, it was traded with primary issuance. Through the primary market auctions, Chagamas first issue brand new Chagamas notes. Through a competitive bidding procedure, these notes are made available to institutional investors, including banks, insurance companies, and investment funds. The newly printed Chagamas notes are given to the winning bidders. Okay, next, it's also trades on the secondary market trading. The Chagamas notes can be exchanged in the secondary market after the original issuance. Investors can purchase and sell these notes among themselves in the secondary market, facilitating liquidity and price discovery. Third, they trade on the stock exchange or over-the-counter OTC trading. Chagamas notes may be listed on the Bursa Malaysia, the primary stocks exchange in Malaysia. Similar to how stocks are traded, these Chagamas notes can be bought and sold through an exchange. Okay, for Islamic Treasury bills, similar to Chagamas notes, it was traded through primary issuance and secondary market trading. For primary issuance, ITBs are issued by the government to collect money to meet its financial needs through the Central Bank of Malaysia, Bank Negara Malaysia, and the Government Investment Issue (GII) program. It's used for the issuance of ITBs in the primary market. And for secondary market trading, after the initial issue in the primary market, ITBs are traded on the secondary market. On the secondary market, investors may buy and sell ITBs used for the issuance of the primary market. Okay, for corporate bonds are typically traded through primary, secondary market, and trading platform. Corporate bonds are first issued and sold to investors by the issuing firms in the primary market. Okay, next, corporate bonds can be exchanged in the secondary markets after they have been issued and bought into the primary market. The secondary markets offer liquidity and enables buyers and sellers of previously issued bonds to do transactions with one another. Investors can take or leave holdings in the corporate bonds before they mature thanks to the secondary market. Next, brokerage company, banks, or other financial institutions may provide investors access to bond trading platform. Investors may browse the corporate bonds that are offered, make orders, and complete trades using the service. The platform may let investors define their preferred trading settings by allowing them to place several order types such as market orders, limit order, and stops order. Okay, for Islamic commercial paper, it can be traded through issuance structure offering as subscriptions, trading, market player, price determination, settlements, and Sharia compliance. ICPs are issued by the issuer, which might be business or a government agency, in an effort to generate money. ICPs are set up according to Islamic principles, notably by employing the sales-based murabaha transactions. During the offering times, interested party can make their subscriptions offers, including bank institutional investors, and private buyers. The ICPs can be exchanged on the secondary market after they have been granted. Investor brokers, dealers, and market makers are just a few of the market players who are active in ICP trading. And because it's Islamic instrument, so it's crucial to make sure the Islamic financial rules are followed through the trading process. And last, for the corporate notes, it seems to be similar with other instruments that I have explained just now. It can be traded through the process which are issuing, offering, pricing, subscriptions, allocations, and trading in the secondary market. Okay, I will proceed to the next part. Is there a secondary market for this instrument? Okay, for Cagamas notes, yes, Cagamas notes do have a secondary market. The secondary market offers a venue for investors to trade previously issued Cagamas notes with one another, facilitating price discovery and liquidity. Okay, for Islamic Treasury bills, yes, Malaysia does have a secondary market for Islamic Treasury bills. It can be exchanged between investors after they issue in the primary market. Investors also can purchase or sell ITBs on the secondary market before the ITBs matures and it's offered the liquidity. Investors can trade these securities on the variety of over-the-counter and electronic trading method in the secondary market for ITBs. Based on their investment strategy and the states of the market, institutional investors, bank, fund manager, and other market players actively participate in buying and selling ITBs. Okay, next for corporate bonds. Yes, corporate bonds are traded on the secondary market. Investors have the chance to trade corporate bonds once they have been issued and bought on the primary market. The secondary market offers liquidity and allows buyers and sellers of previously issued corporate bonds to do transactions with one another. Okay, for Islamic commercial paper, yes, Islamic commercial paper has a secondary market. ICPs can be traded among investors on the secondary market after they have been issued and first subscribed by investors in the primary market. Investors can purchase and sell ICPs before they mature on the secondary market, which offer liquidity. OTC trades and specialized Islamic finance exchange or platforms are only a couple of the ways that ICPs can be traded in the secondary market. Okay, for the last instrument, which is corporate notes, yes, it also trades in the secondary market. Investors can purchase and sells previously issued corporate notes on the secondary market before they mature and it's offered to liquidity. Corporate notes are traded in the secondary market through market participants, per market, and OTC trading. Okay, next I will proceed to where and how we can access this instrument. For Cagamas notes, we can access this instrument through institutional investor, stock exchange, and over-the-counter trading. Okay, for Islamic Treasury bill, we can access through primary market participant, which has primary dealers and institutional investor, and we also can access the instrument through secondary market trading, which has financial institutions and electronic trading platform. Okay, for corporate bonds, we can access this instrument at brokerage firm, online bond marketplace, bank and financial institutions, bond ETF, and mutual funds and financial advisor. They are willing to let us create an account with them so we may access their bond offers. Investors may browse and exchange bonds from various issuers on this market. Bondora, Market Access, and Bonds eValue are some of illustrative examples of online bond marketplace. Next, for Islamic commercial paper, depending on where you are and the niche market you want to enter, you can access Islamic commercial paper through Islamic bank, investment bank and financial institutions, and online trading platform. This platform enables the secondary market purchase and sale of ICPs by both private people and institutional investors. And last, for corporate notes, depending on where we are located, our investing preference and the particular market we want to participate in, we may access corporate notes through a brokerage business, online trading platforms, and exchange for corporate bonds. Some corporate notes are listed and traded on well-known exchange for corporate bonds. Okay, that's all from me, and I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. Name is Muhammad Syamil bin Sulaiman, and now I'll be presenting about how is the instrument used in a bank treasury operation. So firstly, for Cagamas notes, we have short-term funds and capital preservation. For short-term funds, a bank can quickly acquire short-term funds through Cagamas notes, allowing them to meet their immediate funding needs. By purchasing these notes directly from Cagamas Berhad, the issuer, banks essentially provide a loan that is backed by a pool of mortgage assets. While for capital preservation, banks seek secure investment with capital preservation and reasonable returns, making Cagamas notes an attractive option. These notes are backed by mortgage asset and the creditworthiness of Cagamas Berhad, allowing banks to earn fixed returns while minimizing the risk of capital loss. Now next is Islamic Treasury bills, which is firstly is cash flow management. Islamic Treasury bills help bank manage cash flow fluctuation by providing a short-term investment option that aligns with their anticipated funding needs, allowing them to have sufficient funds when required. For asset liability management, Islamic Treasury bills support banks in their asset liability management or ALM activities by allowing them to match maturities and cash flow of assets and liabilities, optimize profitability and mitigate interest rate risk. Now for Islamic commercial paper, for regulatory compliance, Islamic commercial paper helps banks meet Sharia principles and regulatory requirements in Islamic finance jurisdiction by providing investment instruments that align with ethical and religious principles, while also meeting liquidity and investment guidelines set by regulatory authorities. While for capital market development, banks' involvement in issuing and trading Islamic commercial paper helps develop the Islamic capital market by increasing market depth and liquidity, providing issuers with a diverse investor base and facilitating efficient raising of short-term funds. And now for corporate notes. So firstly, how is bank with a trading desk or market making activities can participate in the secondary market for corporate notes? They can buy and sell corporate notes to provide liquidity to investors and earn profits through market making activities. This facilitates price discovery and enhances market efficiency. And second is the banks play a crucial role as underwriters or issuance lead arrangers in corporate note issuance, assisting corporation in structuring, marketing, pricing and distributing the notes, enabling them to earn fees and commissions. Now lastly, for corporate bonds, for liquidity management, banks can strategically trade and invest in corporate bonds to manage liquidity, leveraging the flexibility to buy and sell these securities in the secondary market and optimizing their investment portfolio for short to medium term liquidity needs. And for corporate bonds, allow banks to invest in fixed income securities, earning stable income through regular coupon payments over the bond's tenure, which enhances the bank's revenue and profitability. And now we'll be moving on to the next part to discuss on whether are there any official guidelines regulating this instrument. So firstly, for Cagamas notes, there's Securities Commission Malaysia (SC) guidelines, Central Bank of Malaysia, Bank Negara Malaysia regulations, Cagamas Berhad's internal policies and procedures, rating agency requirement, disclosure and reporting requirements. While for Islamic Treasury bills, there is Sharia standards, central bank regulations, accounting and auditing standards, rating agency requirements, and also Securities Commission regulations. For Islamic commercial paper, we have Sharia standards, Securities Commission regulations, central bank regulations, accounting and auditing standards, rating agency requirement. Now for corporate notes, we have Securities Commission regulations, listing rules, central bank regulations, credit rating agency requirements, and accounting and auditing standards. Lastly, for corporate bonds, we have Securities Commission regulations, stock exchange listing rules, central bank regulations, credit rating agency requirements, and lastly, accounting and auditing standards. Okay, now for the next part, we'll be talking about who are the regulating agencies for the agencies that have been chosen. So firstly, for Cagamas notes, the Securities Commission Malaysia, SC and the Bank Negara Malaysia (BNM) are in charge of regulating Cagamas notes. While next, for Islamic Treasury bills, the Securities Commission Malaysia (SC) and the Bank Negara Malaysia (BNM) are responsible for overseeing and the regulation of Islamic Treasury bills in Malaysia. For Islamic commercial papers, Islamic commercial papers are governed and overseen by the Securities Commission Malaysia (SC) and the Bank Negara Malaysia (BNM). For corporate notes, generally the issue, trading and disclosure requirements of corporate notes and bonds are regulated by Securities Commission or regulatory bodies in each nation. Meanwhile, lastly, for corporate bonds are often subject to regulation by the Securities Commission or other regulatory body in charge of managing the local capital markets. And that is all from me. Thank you very much.